The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pezzamento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pezzamento.
Hi folks, Basil Chapman sitting in for Larry Pezzamento. Larry, who went off to help with the birth of a new grandchild and is taking time off, well-deserved time off, shorting the S&P almost at the exact top. Congratulations. And that's number one. And number two, a fantastic buy signal on Apple right at the lows. Congratulations, Larry Pezzamento. My honor to be able to take this hour, the futures hour, and let's go through the numbers. The E-minis right now down 19 at 1663. This is the September futures. They went where? Right to the 50-period exponential moving average after making a peak D-top in the Chapman wave methodology. Buy signal right at the bottom at the 24th of June at 1553.25 as the technical started to improve. The MACD and slow stochastic on balance volume. Then what happened? It goes all the way to 1695.50. Why has it got 75 there? Should be 50 on the 23rd of July. Pulls back. Look how that green line shows. If you're looking at Tiger TV, look how that green line is showing in a vertical way the strength of. Now this is very interesting. Not only is it the strength of the. Just trying to do two things at once here. There we go. The strength of the E-minis, but it is also showing with the black line right there how the price is moving above. But there's a little pink line. If you can look at it, I'm going to make it a little bit bigger now since this is the futures hour. Look at that pink line. Moves above. It says, hey, be careful, because this is starting to show that there is, in the shorter term moving average, there is a lot of resistance coming up. But it goes to a peak D at 1705.00, round number, on the 5th of August, and now it's pulled back to trough. On the way up, it's capital uppercase letters, A, B, C, D. We try to always get to a D. On the way down, it comes to trough A, trough B. Now it's leg C, going to a low today of 1656.50, trying to recover to this very important low. The whole series of lows right here is 1665.50 to 1665.75. That's going to be very interesting watching it throughout the day. The MACD is still very negative. Stochastic's very negative. It's going to take a really big concerted effort to change that. The weekly chart on the E-minis, possibly a peak F top in the Chapman wave. This is exactly the example I was talking about in my show just now. I'm the host of the Tiger Technicians Hour, 11 o'clock till 12 o'clock Eastern Time every day, Monday through Friday, every market day. And the opening call, that is my newsletter that comes out every day. Just briefly, let me say that we went short the Dow back at that peak D top. It still went to E and then an F, but we're still short. We were in the 100%, which doesn't move anywhere close to the 200% short, but we did go very short the S&P right at the top, and a couple of the other sectors. One of them, actually two of them, the exact tick of the high. Well, one was the exact tick of the high. How it works out, we won't know. Time's still very early. It's just the beginning of a potential down move. So in this particular instance, that peak F is exactly the example I was talking about that I call the right arm extension in my CD introducing the Chapman wave methodology. Let me just show you something quickly. You look at a blank chart. There are only the price bars are here. You don't need candlesticks for the actual waveform itself. You want to identify each successively higher peak by grading them. How do I do that? Well, you could have used numbers. I used numbers not in the very beginning. I counted them, but I used letters and numbers at the same time. And what I found was that Robert Prechter, who was becoming very famous for his Elliott wave theories and all that back in the mid-80s, I didn't want to get anyone confusing the Chapman wave with the Elliott wave. And they are completely different techniques. I didn't quite even understand the edit wave, let alone try to use it. So what I did was I changed it from using the numbers, because I found the number 4, the peak, the fourth peak was the highest peak. That's where you can and very often get the sharpest decline. It doesn't have to happen. It could still go higher. And there are ways of dealing with it. It could go to the 5th or the 6th highest peak, or even the 7th. How do you deal with it? By putting in letters. And it never goes higher than G. You can't get an H. There is no H. It's like music. If you understand music, you can only go A, B, C, D, E, F, G, and then that's it. You have to start again, A, B, C, D. Okay, it's the same sort of thing. So in this particular instance, it's still only giving you letters. How do I differentiate between a D and an A? Why isn't that not an E? Because of the way that I use the arrows, the up arrows and the down arrows. So this is just in a nutshell explains the simplest concept, and it is such a simple concept. I've never seen it discussed before in any of the stocks and commodity magazines article or anything. It is the concept of identifying and grading each successively higher peak and trough, but the troughs have a slightly different connotation. Now, hey, wait a minute, let's get rid of this. Let's see how that fits right here. Well, you went from the lowest low bar at the 200 period exponential moving average right there on that yellow line. You went peak A, B, C, D. Could have been an instant restart. We still don't know if it is. And then it went to an E at 1680.25. It pulls back and goes back above the 9-period moving average, that black line, to F/A. Why F/A? Because at that point, the MACD was still looking good, and the stochastic is way over 80%. That's the level I like to look at. At 92%, it is still saying, in the weekly chart, I do not have a sell signal. It's got to come from the daily chart, dropping a lot more, underneath probably 1657, somewhere around there. We'll start to get the stochastic down to about 88, 87%. I don't know what it's going to take for the stochastic to actually drop below 80%. Probably a move to the 1630s or time. Time could do it because it's a look-back period, and it'll take that whole drop into consideration. Okay, now let's go on. So that's the way I'm looking at the 120-minute chart. Gave just a fabulous series of indications right there, and these arch formations, right side, left side, price time match, and a trend line that's coming very important. That big long wick candle of the last 120-minute bar tells us that the level of 1661 to 1662, that body is going to be hit, even if there's a bounce to the upside, or even if there's a slump below the low of 1656.50. It'll at least come back and touch that. And then there are a bunch of techniques that I look at to say, is the downtrend continuing, or is there a change of trend? Okay? So some part of a candle will come back and touch it. So now we've done that. Now let me do this. A couple of questions I was asked, and I want to get to a bunch of those questions. In looking at the charts, what is so important to me, let me just move this up here, and what we're looking at is in the futures. If you look at the NQU, I don't know if I updated this. NQ, yeah. Oh, it went to the D that was needed. You see, I keep talking about that D. Well, there it is, D, right there. That makes it, at this point, vulnerable to some downside movement. That's the NQ. That's the E-mini NASDAQ 100 September future. And the MACD is just turning down. Stochastic's now at under 80%. But in the weekly chart, stochastic's still at 93%. And I've got an alternate count. Let me just double-check that. There's no other way. I've been through this so many times. No, this is C, G/C. So let me put that in here. In the weekly chart. And it's saying, hey, there's internal strength. Any bout of major strength in the market at any point over the next week. So now this is recorded on August the 15th, Thursday. And there's a chance, because I'm going to be away this coming week, that if this is recorded, you'll be listening to it as if it's archived. So let me just make real clear that in the NDX future, the daily is made a peak D. I have to wait for the end of the day before I can tell whether or not I'm going to put a down arrow. If it closes under the 9 EMA, yeah, that says that you should, but I really need to see something deeper. 2 days down, I don't want to put a down arrow just arbitrarily. I did in the Qs, funnily enough. Look, why? I'll explain why. Because in the Qs, we broke below a very important doji candle, the doji candle of the 7th. Now, I could be wrong, could still go to a leg E, but at this particular point, I haven't yet put the down arrow. I'm real close by the end of the day, possibly putting in a down arrow. I don't need to do it. It doesn't do anything. It turns out that we actually short the Qs. We shorted it almost at the top tick, within 11 or 15 cents. So all we need to do now is just monitor that position. So, okay. I wanted to get to that. I just wanted to explain how this whole thing works. And the weekly chart is hitting very strong resistance. Here I've got it as leg F, and I'm staying with that. F/B. I'm staying with a chance of an F, even though the stochastic is 93% and the MACD is still strong. I don't have a signal. I don't even have to think of a signal yet. It's gone slightly above the inside track sell zone. That's very important. If it pulls back, 74.85 will be the level to watch on the Qs, the QQQ Trust Series power shares. So I just wanted to go through that and also explain I've got a leg E up in the weekly chart, a monthly chart of the Qs. It also went above the up channel, very long-term up channel. So I'm going through all these different indices and I'm saying this is what I'm looking at. No signal yet in any of the major indices in the monthly charts. They are still really strong. That's the reason why I think, regardless of any down move here, even if it's time and price, I still believe we're going to make new highs based on the technicals. But that doesn't mean to say we aren't vulnerable. For instance, there's not much distance here between 75.82 and the up channel inside track support in the monthly chart, because at 68.85, 7 points, just a 10% correction, it starts to break for the very first time this major uptrend line. So, okay, we've got that out the way. Now we want to do other things. Let me just run these charts. If I get a chance, I'll start talking about them in greater detail. The HGX, which is the home builders, HGX. That's the Philadelphia Housing Sector Index. It's trying to make some kind of a bounce, I can call it. The monthly chart has made a peak D and a very sharp pullback. The monthly is not even half over. And it's down below the 9-period moving average. The MACD is turning down. Stochastics is 72%. Let's wait until the month finishes. But the weekly chart made a 210.01 peak E top in the Chapman wave with terrible technicals, and now the technicals are way down. The stochastics at 22%. I suspect it's going to go down to the single digits. To the teens, the stochastic in the weekly chart. That says this is just a bounce, and we should reverse and come back down and make a lower low. I'll be back. Basil Chapman sitting for Larry Pesavento. The Dow is up down 177. S&P is down 18. I'll be right back, and we'll talk about bonds and other things when we get back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
So, folks, what we're looking at here is the Philadelphia Housing Sector Index. I'll get to the futures in a moment. I just need to do this because there could be a bounce. The idea is that the moment it breaks the left side, this is the daily chart, the low of the 24th of June at 168.79 saw an A, B, C, D move to the upside. And then what happened, there was a doji candle at the top, and now it's given in the full arch pullback. It's really a left side, right side price time match. I didn't have a chance to put that in right now. And what happened is it just went underneath and it went to 164.03. This, my rule of thumb is that this is the candle that needs very much and very quickly to power back into the arch formation. That means it has to go above 168.79. It's trading at 164.03 right now. And it doesn't make sense. That low is 168.79, and the high today is 169.50, and 169.28. Oh, okay, yeah, that's what it's doing. That the bar that takes out that low within 1 to 2 bars, and it actually started yesterday. Yeah, so today's the day, and that says it's going to have a really quick reflex action. It's got to punch into the 172.30 area. That's the 9-period moving average. Close above it, and then it can have another bounce. Could it be a major buy signal in the home builders? At this point, I would have to say I don't think so. I think it's going to do a retest based on the weekly chart and especially the monthly chart. So if you are long, some of you asked you about your stocks. If you've got those stocks right now just off the lows, hey, that's fine. All you need to do is make a stop below today's low and stay in the position and keep raising the stop. I just make it as easy as possible. That's the way you get a buy signal that can go to a buy mode. If it starts to fail, it's going to make another arch formation and take out the 164.03 level on the HGX or your stock, whatever it is. Okay, now I need to do this. We've gone through the Dow, we've gone through the S&P, we've gone through the Qs. I want to look at the IWM. The IWM right now is trading at 102.61. This is the iShares Russell 2000 ETF. Made a peak F top at 105.63. 105.63. And you can see here, if you're looking at the charts, look how weak the technicals were when it went to the high. A big divergence. And it's a leg E, potential peak E if this Friday it closes underneath 190, should be 105.63, sorry, 105.63. If it closes under that, that says that's a peak E. Does that say it's a major sell? No, it just says it's a peak E. I've got to see it decisively close underneath 101.50. 102.20, but I'd say 101.50, and it absolutely says that's a peak E. Put a down arrow in. You've already got one in the weekly. That's a sell signal to sell mode in the weekly on the IWM, but it's leg E in the monthly. You can see why when I'm putting the whole picture together, my weekly charts are saying this could turn out to be price and time on the downside. Be careful. That's what I'm saying. Now, if we're going to the futures, I need to talk about one thing that's really important. The yield. Larry always talks about the yield. The 30-year yield on a weekly basis has gone to leg D. Almost all the other peak Ds have then gone on to an E before turning down sharply. That says that bonds are going lower, but it also says in leg D you can get a pretty nice snapback. And 2 weeks ago I said, 3 weeks ago I said, I think we're going to make leg C in the weekly charts. 2 weeks ago I said, I'm pretty sure we've made a peak C. Now it's confirmed we did make a C, but we went above that peak C in the yield. That's the white ones, the 30-year yield above 37.74. So this is now at 38.37. That's leg D. Going into that whole area. Look, there's no resistance there. Got to watch this. Leg D in the 10-year, but it hasn't even made leg B in the 5-year. This is a divergence that is going to be really significant. Between the first big divergence we've had. We had a big C minus back in 2011 in February, where the 5-year only went to peak C minus and the 10 and the 30-year yields went to E. This divergence is the biggest one I've ever seen. Not ever. I've seen for a long time. And the difference between the two, the price movement here, the price movement here, and the price movement here, that is big. And as far as I'm concerned, that says be careful, because the yields right now are showing that bonds are going to be coming into a really critical area. Now let's go to the futures. All right, we'll be back. We're going to go to the USU, the September bond, which is trading at 131.23 and we'll talk about it. I'll have to go to the continuous contract for the explanation. I'll be right back. Basil Chapman sitting in for Larry Pesavento, and this is the Commodities Hour, but I usually do the Target Technicians Hour, 11 o'clock till noon, Monday through Friday on market days. Dow's up, down 170, S&P's down 19.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi folks, Basil Chapman, Tiger Technicians Hour, and I just wanted to show for Lewin, New Hampshire, the ESU did that. It pulled back to the 62-61 area. Now it's in leg B. It's really struggling, but I would say don't let it go under 1661.50. Get out. In fact, that's where I'd probably want to switch positions. Or if we can go to around about 1660... 6.5 to 1667 if it does that. Okay, back to our story here. So I was looking at, of course, now I'm going to be able to find it, USU. The USU is very important as far as I'm concerned at this particular phase right now. This is the bond September contract, 30-year bond. This leg E to the downside, I need to go to the US. This is the continuous contract, same chart pattern, close to the same chart pattern. What's most important about this 30-year plus bull market and up channel support is getting to a very critical level in the monthly chart. The monthly chart says this is trough A, B, leg C down. Let me just put that in. And because of it, A, B, and this is leg C. You can see that containment area, this up track support area, that this level between the green line, which usually says if you get in there you can buy, but you better put a stop underneath, because if that pinky red line is taken out, That's going to be very important. It'll be the first time it's closed. If it closes under that, first time in, well, since 2007 in this particular up channel. This is actually an up channel that goes back. Look at this. I didn't do it. It's just a little different. 2002, why is it not going back further? It should go back further. I had to redo it now. Okay, doesn't matter. So what I'm looking at here is that it's really a 24-year bull market, bull channel. That's the whole thing. It's actually an even longer bull market because it was 1987 that was a low. Look at this. What's important is that it keeps the MACD is very bad. Stochastic's very bad. Price has not dropped as much as you would think because the Fed is trying to prop it up. But I can tell you this. If I see bonds in this continuous contract go underneath the support, of course, I should give you an exact price, but on the continuous contract, a close below 127, a close below 126 to 127 will say to me, bull market is now confirmed, done in bonds, and the upside resistance is 138.20. That's the level. If there's any rally at any time, 138 on this continuous contract or the 9-period moving average, whatever the price is, because it gets smoothed out every month after options expiration, that's the level that I'd be looking to short. But in the big picture, look at this. And I'm trying to give big pictures here. This is very important. Couple of sessions. I want to show the larger bit. We're getting so close to the 200-period moving average at 129 and 9/32 of the continuous contract. This whole area has to be a bounce area. It could be maybe no more than a bounce, but it better not break down and hold for 2 to 3 weeks underneath 129. That'll be terrible, terrible action. Yeah, it could spring back, but it's lowering the upside, lowering the resistance levels each time it goes lower. So I think this is something to watch very closely. Let's look at the TBT, because the TBT has been going very strongly to the upside, and the TBT, oops, hit the thing correctly. There it is. The TBT is in leg. Now that's the thing I want you to look at. It's in leg D. So you have leg D in the yields, which should follow the TBT, which is the 200% TBT, ultra short Lehman 20-year Treasury bond fund. So this is saying when you get to D, watch out. You can have a bit of a pullback. It could be more than that. It doesn't have to, but that's where you got to be careful. But the MACD is so strong in the weekly chart, and the stochastics at 86%. Now, what's important about this is only leg C. I say only because the monthly chart has taken a long time to make this very important pattern. It is the cup formation. I could spend an entire day talking about this cup formation, but in the meantime, just treat it as something with great respect. The whole thing will change if the TBT takes out 62.77, and right now it's at 80.04 in the monthly chart. So that's something to be aware of. Now, what we've just done, I think we're getting real close to bonds having a bit of a bounce. And I'm going to warn Lou while we're talking. Lou, think of the short side. I would not be playing that long side. I'd be looking at the short side. Even if you're thinking counter trend, the tide is washing away. This is a rip tide, in fact, today. Be careful. So this is leg F in the 120-minute chart, the daily chart of the TBT. It says the stochastic is only at 74%. The MACD is trying to turn around. It's just crossing positive, but not very. The histogram has just got one bar in the green. That's the 0% line. I'm going to be watching this real closely, because by tomorrow we could suddenly see money start to go back into the, I can't believe I'm even saying this. You remember, I was the one that for 10 or 12 years was saying, based on the Nikkei, the Japanization of our bond yields, they are still really low, really, really low. But they almost went to zero. I mean, the treasuries went to almost zero. So for any of you who've got money in a CD or anything, you get your end of the year statement and you're looking to say, what? A hamburger or or what am I getting here for to live on for the dividend for the year, whatever it is. So look at this. This is something to be very aware of, that and this pattern, this up channel, it's like a flag pattern, but it's a flag pattern that looks like a socket, a wind socket. It looks like it's dependent totally on the wind, and as soon as the wind dies, it's going to pull back. But all it needs to do is pull back to, it's a 79.99. Big deal. Pulls back to 77.50, or even the uptrend. Let's do the same thing here. Look, there's the channel. Here's the inside track, Chapman wave buy zone, right there. Turn into light green, and you can see what I'm looking at. So we could have a period of weeks, few weeks, pulling back sharply from a doji candle tomorrow, gap down on Monday after a peak F. It could recycle. Maybe it recycles. Maybe this is brand new leg B. I'm calling it an F for now. So I'm watching this. There are tidal turns that have been going on in the last couple of weeks, especially in the last week. Try to identify them, try to trade them. So I need to do a couple of things else here. We've got Brent in Martinez, California. Hi, Brent. We said we would look at the UNG today, right?
That's right, Basil. How you doing today?
Good. And you are still in the long position. You got those calls, right?
Oh, yeah.
Okay. And Brent, and UNG, which is the United States Natural Gas Fund, and I looked at this, and at the same time I looked at corn, which was giving me the same kind of signal. Of course, this is Larry's show. Larry does commodities. He trades these things. I'm looking at a chart. I've never traded corn in my life. I think once in my opening call we did trade the CORN, which is an ETN. And I know that I heard Andy Hecht, who's his fabulous commodities show, talking about it. He doesn't like it at all, but sometimes it's the only thing you've got for an ETF that represents something. But so the corn is actually moving really nicely, and the UNG is doing the same thing. So here's my recommendation. We said we'd look at it. I said I did quite a bit of work on it. I looked at some of the gas stocks. I wasn't able to find the time to do. I played tennis, finished a little late, and I didn't have a chance to actually look at the natural gas stocks themselves. But what I did do is I did quite a bit of work on this, and my thinking was, if there was a nice spike today, you remember what I said to you? It's that gap in the UNG of 18.49, the high of the 29th of July, and the low from the previous day of 18.82 on the 26th, that gap down, that is the level I'd like to see natural gas, the UNG, go towards that level. And here in the Tiger TFNN, because of what Tom discusses, he often talks about ICE. In this case, it would be an island reversal. It would be absolutely fabulous if at any point there is a stop before, it could be anywhere, 18.49, preferably before 18.49, but it could actually be above. But what I want to see is a gap at some point with space between the last bar and the next bar that goes above 1915 without breaking 1915. That would be a gap to the upside and create an incredible, I'm going to draw it in right now, an incredible island reversal. And that would be saying, you remember I spoke about that weekly chart? I said, let's skip the monthly chart. I said, let's skip the weekly chart. That monthly chart is the one that's got that H pattern. Let me just draw it. So for anyone looking at Tiger TV, they know what I'm talking about. I think it's this is the technique that I use. It's called the H pattern, and I believe that's chapter 17. Let me just find it here. Yeah, chapter 17. Let me just get to it. That's this pattern right there. And what I'd said is, sometimes you get the pattern that comes down and looks just like a lowercase h. H. Here we're looking at slide 334 of my CD introducing the Chapman wave methodology. But then at a certain point, and I think gold is going to do this, you get a very sharp rally. It pulls back, and then it makes the lowercase m. It looks like a series of m's. That's what I think is going to happen in natural gas. It has happened already. There's a little H with another H, but this makes a larger arch formation. And I'd say to you, if natural gas is able to trade anywhere into the first of all, it has to trade into the 1880s to really get traction. That'll be your torque. But the daily MACD will get momentum if it actually gets to the 19 or 20 area. If it can get above 20.23 on a monthly close, that will say two things are happening. It never retested the low that it made back in early 2012 at April of 2012 of 1425. That's number one. And number two, it says this rally could actually have legs to break above 2409. Now, I'm not sure it's going to be that case, but you and I have spoken about it. My opinion is that natural gas is going to have its day, and it's going to be a fabulous mover at some time. You might have gotten the very point, that inflection point that says, you know what, I'm making my reversal right now. I don't know, but boy, the charts are saying, the weekly chart says, I need another arch formation and a retest. I get to 1870s. If I pull back, I want to retest the 18.20 to the 17.90 area. If that's successful and I go even higher after that to 20.01 or higher, I'm looking good. That monthly is going to improve. Everything falls apart if it takes out the low. As I said to you before, if it takes out the low of 16.50, closes under 1659, all bets are off. It's just going to remain in this trading range. But I think you've got a really nice entry. Congratulations. Didn't give you much chance to speak. But
okay, Basil. I really appreciate all your help and laying it out the way you did. It's a big help. So thank you very much.
So we're going step by step. I think you've got the initial first step correct. We will know soon enough. But I think this is something I'm going to watch closely. I'm even going to write it down on the chart, and I'm going to say, Brent's entry point. There you are. It's on the chart. It's notated. It's there forever. Thank you for calling, Brent. Okay, let's go down. Next caller, we've got Danny in Atlanta. Hi, Danny. How are you? I'm
just fine, Basil. How are you?
Very well, thank you.
I wanted to make sure to get your take on gold.
Okay. Is this GOLD, the stock, or gold?
Not the stock, gold.
Okay, so you're looking at...
Either one.
So, okay, let's look at GCQ. I'm looking at the gold contract, okay?
Yes.
Okay. In the gold contract, what's happening is kind of what I'm trying to outlay for Brent in California, looking at the UNG. There's a difference, though. You see, natural gas has never had that kind of, well, I shouldn't say never. Natural gas never had that huge move to the upside. Oh, I missed it. Let me just type it in again. At NG, just to be clear. Natural gas, in fact, once was, well, I'm looking at the continuous contract, way in the 25s, 29s, and now it's been trading in the low single digits. That's very different to at GC gold. I suspect I've already drawn this pattern. I've drawn the patterns before when it made the peak F-top back at 1494 in the continuous contract back in September of 2011, August of 2011. My thinking is that that same pattern is going to be repeated, just as I showed in the CD introducing the Chapman wave methodology, the arch formation that keeps coming down. This is just another bigger arch, I think, in gold. There are a couple of things that I want to talk about. So, Danny, hold on. We're going to be doing a lot of work here with gold and silver. Be back with Danny in Atlanta. Now the Dow's down 197, S&P's down 21. I think the loose trade is done. Wow.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Wow, time is flying. I mean, just, what is this, the last few minutes of the second hour, and I've hardly touched anything. I didn't even talk about the round numbers. I had a question during the break from a subscriber about Stratasys Inc. Will it go to a COD? Well, it's leg F that's most important, the weekly chart, and I don't know, but I think it will go to D. The technicals are very strong, but it had a round number opening the other day at the high of 103, and then it went to 104.34. These round numbers, they're right linked in. You can just go NUS. That's that skin, new skin, HSY, Hershey, just all over the show. There are signs here that certain stocks are topping out. So let's go back to, just wanted to mention that. So let's go back to the GC contract. Today we're looking at the bigger picture. Now, of course, we just had a 15-minute trade there for Lou in New Hampshire. But the big picture says to me that I've drawn in the arch formations. On a short-term basis, I'm trying to enter into new long positions on gold stocks. I like them. I have no problems. This is the bigger picture. And my bigger picture says that the move that gold, until I see the guys that have just opened up the last 4 years or 3 years, opened up their buy gold and silver, until I see for sale signs, I'm not convinced that we've made a major low in gold. And that's what I'm saying. I don't think there's no reason why you can't trade them. I think that the low that was made on the 28th of June, the week of the 28th of June, 1179.40 in gold, is a low. I don't think it's the low, but a low that can be really tradable. And my target is that if gold is able to take out 1391.80, the high of the week of the 25th of June, 1448, close to 1448, will be the absolute important thing to watch based on the 200-period exponential moving average. So step by step. What's next? Gold hasn't even made leg B in the daily above 1349.10. Go step by step. So I do like it. So, Danny, in answering your question, I think gold has made a bottom, and it's a pretty serious bottom. Whether it's the bottom or not, I just don't think it's the, but is it a tradable one? Absolutely, it's tradable. It's holding well. It's looking good. Silver, if you don't mind, I'm just going to pop into silver for a second. Silver turns out now to be a much stronger chart pattern in the daily and the weekly than gold. It was much weaker, and that was a relationship I think that Andy Hecht was talking about, that there was a stronger relationship, and there it is. And it's taken out that ugly candle of the 20th of June with a high of 21.30. So this is important. The level of resistance in leg D in the silver trade is going to be in this entire area of 2220 to 22, I'd say 2270, maybe touch 23. Then it pulls back, and then we take a bit of a breather. Dollar starts to have a little bit of a bounce. Now, I can't do this right now, but if you don't mind, I'm going to use this opportunity to show something else if I can find it very quickly. There it is. There's that VIX leg B up in the daily, leg B down in the XIV, and waiting for data. It's not there. Let's see if it's here. There it is. This is the chart I wanted to show. Here's the dollar, which is trying to find some support via the UUP. There is the S&P making a potential peak F-top in the weekly, and there is the TLT. That relationship is going to be really important. Where's the one that I want you to find with the GLD? That was the whole idea. I can't find it. We won't. I'll do it tomorrow. I'm going to show the chart with the GLD, the UUP, and the TLT. That's the one I really want. Oh, there it is. Is that the one? Maybe I can use this in the remaining time. I don't know if it's going to work. Yeah, this is, no. Wrong chart. Don't worry. That's not the one we wanted. So let me answer your question real briefly. Gold should be going higher. It's getting close to some kind of a pullback. I think it's a tradable move, and it should go on for quite a few weeks. So I think that answers your question, right, Danny?
Yes, thank you.
Okay, thank you. We'll be right. I'll be back tomorrow. This is Basil Chapman signing off for Larry Pesavento, and I'll be back for my show tomorrow at 11 o'clock. The Tiger Technicians there. Have a wonderful day. Thanks for being here. Stay tuned for Daryl Martin. Fabulous show coming up.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.